Good morning, everybody, or depending on where you're located, good afternoon. Welcome to Deliver Capital. And today we're going to be talking about our strategic partnership program. My name is Anthony, and I'm the CEO and founder for Deliver Capital. Well, let me ask you guys a question. How many of you guys would you like to make the most amount of money in the least amount of time with the least amount of headache? In the next 20 or 30 minutes, I'm going to teach you guys how to increase your volume and build an organic referral system, providing you access to other financing products in addition to merchant cash advancement, and how we can revive lost leads and denied applications. We're going in depth for showing you how to make anywhere from $1,000 to $10,000 per client with us, and of course our loyalty program and why you would want to come back. We're going to open up the floor at the very end for Q&A, and if you have any questions during the presentation, go ahead and write them in the chat box, and we'll answer them at the very end. So I think we all remember the credit crisis back in 2008, where banking regulations made it more difficult for banks to compete and lend. Many households and small business owners ruined their credit when they were denied the access to capital that they needed. And many of those who got denied could have easily been approved with the right compliance process and credit management. So what we do is that we like to optimize their credit, getting them into compliance, and get them approved. I remember, right before the credit crisis, where you were able to walk inside of a bank with a 2-year-old corporation and walk out with anywhere from $50,000 to $100,000, really based upon your personal credit. And I think those were the good old days, but unfortunately, it's not as easy anymore. So Deliver Capital is in the business of utilizing its tools and resources to help clients qualify for the right sustainable loan, so you and your clients may grow accordingly. We're a team of bankers, underwriters, loan processors, analysts, and compliance officers that can identify the right loans for you and your clients and work on professional loan submissions to get approved. We have access to over 5,000 lenders. Deliver Capital's team will give you the best odds for getting approved. And I think the best part here is, as a performance-based company, you only pay if we execute. There's zero risk for funding. And I want to repeat that, guys, is zero risk. We're so confident in our performance that we don't take any fees unless we perform, because we're highly trained personnel with backgrounds in personal and commercial lending. So what if we were able to achieve this, better results, make more money, and to retain happier clients? Unfortunately, the majority of small business owners do not understand how to structure their loan package properly to be able to present to a lender. So we found that if we work with our strategists, our processors, and our underwriters, we're able to correct these items before submission. But unfortunately, business owners are forced to take high interest loans due to personal and business credit discrepancies. What we found is that if we get clients into compliance, we optimize their profile, get them ready, and then we submit for those tier 1 financing programs. Merchant cash advancement is the quick fix, but it's not always in the best interest of the client. And I have to say, how many of your merchant cash borrowers are ecstatic when you give them anywhere from a 1.2 to a 1.5 factor rate when you close? But what if you were able to get them qualified for more money with less interest, with longer terms? How would that be able to change their outcome? To give you an example here, if you take a $100,000 merchant cash loan with a 1.3 factor, 6-month term, their daily payment is going to be $1,031, which equals close to about monthly about $21,666. But if you got them into a $100,000 tier 1 bank loan from the major bank, average of 7%, 5-year term, their monthly payment is going to be $1,980. It means you're saving that client a monthly cash flow of $19,686. So I have to ask the question, do you think they were going to come back for either round 2 or refer their friends and family? I think one of the best businesses we have is referrals. It's less work, more money, There's also zero expense. You don't have to pay for marketing to get those leads and always turn and burn, not looking for new fish in the sea. So with us, we provide access to over 5,000 lenders, ranging from major banks, credit unions, private lenders, equipment lenders, account receivable factoring lenders, and alternative lenders. So sometimes clients don't have all their financials organized, surprisingly. But through our research, we found flexible lenders that may not require everything. Now, each bank is different, but if we have a client that is able to provide, their full documentation, it allows us to get higher loan amounts. The more docs they're able to provide, the more access to additional banks that we can provide. But through our research, we found here that working capital loans, anywhere from up to $100,000 per approval, unsecured term loans from lines of credits, 6 to 10% average, 3 to 5 year terms. It takes us anywhere from 1 to 3 weeks to close. Now then we have equipment loans, and we love equipment because it's collateralized and provide a little more easier qualification. We have up to $250,000 per approval, average of 5 to 12% interest rates, 3 to 5 year terms. It can take us anywhere from 2 to 14 days to close. We have another unique product for credit card funding where, an average of anywhere from $30,000 to $150,000, really personal credit based, 0% interest, personal and business cards up to 18 months. Now, we like to utilize a lot of the credit card funding program as a tool to help other clients structure other programs. We'll get a little more in depth in some of the additional slides, but we utilize our relationships with bankers to get this approved. Then we have account receivable financing. And so for an example, if you're a company that sells widgets to Walmart, Walmart typically takes about 90 days for them to pay you. So in with factoring, if you get set up with a factoring company, you can fund up to 97% of that receivable upfront, increasing your cash flow accordingly. Then we have your bank statement loans, very much for merchant cash advancement, up to $500,000 with a 500 FICO. Now, we like to utilize merchant cash programs, usually either as a stepping stone or sometimes a client needs a short-term bridge to be able to cover, a certain project or some sort that they're looking. But we don't like to have the merchant cash as their final solution. So what do I mean by that? So once properly utilized, sorry about that. So what do I mean by that? If we utilize merchant cash as a bridge to be able to either pay down some additional debt or utilize or optimize the personal credit, we can then roll that back into additional programs to help them with the tier 1 financing. So it could be a bridge, it could be just that, that stepping stone theory, which I'll get into in the next slide also. But once properly utilized, do you think your relationships are going to stop with that particular client, or do you think they're going to come back with and go through either round 2 or make additional money? Would you think you'd be making more or less through that? Now we also have personal loans for funding. We average anywhere from $250,000 to about $25,000 to $250,000. Average 6 to 10%, 3 to 5 year terms. Can take us anywhere from 2 to 14 days to complete. We have other products, but we'll cover that on the next one. So we're very, very big on research and development. We're always up to date for new products in the lending industry. So how do we get results? How do we get better results for our clients? Now, we have very strong relationships with our lending partners. We identified all the underwriting guidelines for each program, which literally took us years of research to compile. We like to pre-evaluate deals before we submit. We like to avoid denials. A lot of times when we get the full scenario, we send it to our banker, have them pre-evaluate. They give us their thoughts. If we're able to correct any items before we submit, mitigate the risk for us to get any denials, therefore. Then we have, the piggybacking off of our existing volume, because we are able to get additional exceptions. Now, when we work with our banks, because we send so much business their way, sometimes a client might have a blemish or something that's off of the package. We usually like to build a story of what happened to be able to have that banker fight for us and work with the underwriter and get that overturned. And hence why the bankers like to push our deals. Now, we're very big on problem solving, anywhere from short to medium term strategies that enable the client to get more and better solutions with time. This is what I mean by the stepping stone theory. And I'll give you guys an example of a recent client. We analyzed this one client's profile. He was very over leveraged with about, I think, 4 different merchant cash advancement loans that had a lot of UCCs being filed. Wasn't able to be qualified for any other type of loan. So what we said is, okay, well, let's go ahead and get you some credit card funding. I think we raised about maybe 60,000 or so for him. We took a portion of that money, paid off the merchant cash UCCs, removed them from the profile, paid down some personal debt, optimized the personal credit, and got them into tier 1 financing. A little bit of a debt reconstruction of different creative strategies that we utilized. So for those of you who are in the MCA space, what if you were able to take your merchant cash clients and turn them into tier 1 clients quickly? So what we do is that if you take your book of business, your current relationships, past, or any referrals that you have, you send it to us and have us review the profile. We look at the compliance, and we'll either fall into 3 different buckets. Either they're qualified, we're ready to submit, we execute, and we get paid a lot faster. We find either some elements of the profile that needs to be corrected, go through our compliance department and get them fixed, come back and go for submission. Or upfront, we're going to say, you know what, this is too much work for us to be able to fix, or the client just way out of compliance that it's not fixable, right? So denials is what? Time is definitely money, and we like to be able to execute and make as much as possible while helping the client. So give you a little background for what we look for when we look at a profile. So personal credit anywhere from 660 to 680. We prefer to be in the 700s, but that's typically the minimum that we would like to see. Minimum trade lines about 4, averaging about 5,000 at minimum. Usually about 1 installment for 15 to 20,000. We like to see at least a total amount of trades of 40,000, at least seasoned for 2 years. Now, maximum credit utilization of 30%. Sometimes we can go a little bit higher depending on the strengths of the other profiles. The business credit and the financials, there's some exceptions we can have, no major delinquencies. We also look at business credits. When we analyze every profile, we look at business credit and personal. We like to see at least close to around 25,000 at minimum in business trades, no major delinquencies. If they have a D&B PAYDEX, it helps dramatically when we submit. No existing working capital, UCCs. A UCC1 typically is blankets all assets. It usually has to be paid off and consolidated. Equipment lenders, equipment UCC is a little bit of a different tier. Sometimes they don't need to be paid off. We always like to look at financials, 2 years personal and business, year-to-date financials at that point, at least 4 months bank statements. So if your clients don't qualify, this is what we do, right? I mean, there's other programs that we can work with. However, the business credits, I'm sorry, I should have missed one point over here. When typically we look at a business credit profile, lenders are actually likely to give 3 times more to increase their approval rating by having some. So if you don't have it, sometimes the other portions of the personal credit and the financials can bypass the business credit portion, or vice versa. So the strength of each one of these things that we look at can actually provide those exceptions. So overturning unqualified prospects. So if somebody is in the second bucket where the compliance aspect needs to be put in place, this is where we built a team of people with the credit management. We're very big on education. We typically, when we speak to clients, they give them the recipe to get to the 800 FICO score. Good practices on being able to optimize their profile as much as possible. Sometimes a little tweak can make a big difference. But if there is a blemish on their personal credit, we are able to fix discrepancies on an average of anywhere from 2 to 8 weeks, including everything from inquiries, late collections, tax claims, bankruptcies, judgments, et cetera. We have a whole department that is dedicated from this. It is a case-by-case scenario. Once we review, we give analyzation after the fact. And we have additional tools like credit enhancement. We found that by adding trade lines to be able to boost somebody's score, everyone can add about 5 to 20 points per account to be increased. So somebody who has that 660 FICO, is in their best interest to be above a 700. Will the bank look at you differently? And if there's a little fine tweak that we can do by adding some additional trade lines or optimizing credits or reducing some debts, then it makes all the difference in the world, and they're going to get those tier 1 financing at the same time. We also have a business credit building program where we have strategies on how to build business credit within 30 to 60 days. Everything from Equifax, Experian, SPFE, DNB, and PayNet all have different criteria. All different banks look at different bureaus for analyzation. Sometimes they look at just SPFE and DNB, sometimes just Equifax. We've mapped out all that through our underwriting guidelines. So we like to give you more than you ask. We overachieve your clients' targets so that they have better options to choose from. What we do is that when we analyze, we shop for all qualified loans, we pick the best terms, get more approvals than they need. Then your client has the option to go with none, some, or all. What we'd like to do is monetize your current and past relationships, even including your approved ones that you currently are going to be working with us, overturning the Teva denials. And what I like to say is, the jack of all trades and the master of none. What we'd like to help you to do is to focus on what you do best, right? The recipe for success. What we've learned is that, you can't get very far by yourself. So partnering with the team will be able to get you about 5 times more of the results. If you can clear your time and, acquire more and nurture more clients, it's a win-win for everybody. With us, what we would like you to do is be your own boss, but you have the support staff to assist you. We would a streamlined process and be able to be part of a bigger team. There's certain things that we won't accept. And I think working with, in this industry, there's a lot of clients that are just unapprovable, right? It's just, the file is just too difficult, or the client just, loves to write off 100% of everything and show negative balances. Sometimes the credit is just way too sharp for them to work. What I say is time is money, and what you focus on is what you'll get. So low quality files is something that is a subjective element. Upfront if it's going to be approved, compliance, or denied. There's also sometimes we get a lot of files that have already been pulled multiple times, where they've already shopped around and they've already killed their deal. They've submitted to 15, 20 different banks, and they expect us to go ahead and fix it. So we like to be able to work with the clients, upfront, directly, be able to solve their solutions. We also have shady business practices. None of these shell companies, these fraudulent documents, we catch them. We have a whole compliance department for checking these type of elements. We don't want to be able to send bad business to our bankers, because it reflects back on us, which then will reflect back on you. Therefore, the relationships we hold are very, very strong, and we want to be able to send great business. We don't want the clients with this set of wrong expectations. Therefore, we have, the right to refuse, any business which doesn't hold to our standards. What I'll say that, it's the same formula for qualifications for if you're working on somebody with a $100,000 loan, or a $100,000 business, or a $3 million business. But where do you make more money? So try to focus on what you're going to best optimize your scenario. So with us, partners do get more and much more. So we have 2 different types of programs for how you guys make money. With the affiliate side, sometimes for those marketers out there who don't want to get too involved with the client, the responsibilities for this is that if you just send us qualified prospects, We'll do all the work, we'll do all the consultation, we'll take it from start to finish. Once it closes, we'll be able to provide you guys a $500 referral fee. For those of you that want to do a little bit more with the ISO partner, the partnership program, where you're speaking to your clients, you're selling them on the program, and you gather the initial documents through our checklist that we'll get into after you sign up with as a partner. And here we're going to give you guys a buy rate of 10%, and anything above that is you guys to keep. So it's industry standard. You can be anywhere from 12 to 15 and plus percent. But with that, we created our loyalty program. This is where we're able to reduce our buy rates as we fund deals together. All right, get a little more of an explanation here. So here's a little bit of a tier system that we've created from bronze, silver, gold, and platinum. So let's just start off here with the amount of funded deals that you guys provide. So let's just say we have everything start off from 75,000, assuming that the gross fees is 14%, which nets about 4% to the partner. So if you fund 75,000 with the buy rate of 10%, fee is going to be about 3,000. So what happens here is that until you fund your second deal, your third deal, let's just say in 225, 300,000. Once you total about $1 million in gross funded amounts of deals, what we're going to do is that we're going to reduce our buy rate and kick you back 0.5%. So from that amount, you make $40,000 for the gross fees, and then we're going to give you another $5,000 in addition to that. But what happens is that from that point on, the buy rate is reduced and standard at 9.5%. So as you can see, the total amount of funds here. Okay, we just spoke about that. So 9.5%. So for every million that you fund with us, we're going to be reducing our buy rate, allowing you guys to make more money and choose what you want to make. So for the next tier, let's just say you make $2 million you fund $2 million with us at the $1 million tier, we're going to then kick you back another $5,000, or 0.5% there, reducing it to a 9% buy rate. Then you get moved on to the gold package. So at this point, we're going to fund the deal all the way down to $3 million, because you funded another $1 million here. Then we're going to kick you back another 0.5%, therefore reducing our buy rate to 8.5%. Now at platinum, we're going to, for every $500,000 that you fund, therefore we're going to kick you back another 0.5%, from there. So it's going to reduce ours to 8% for every $500,000 thereafter. All right. Platinum, little diagrams for you guys to look at. And again, we can go ahead and explain this a little further on for different conversations thereafter. So we want to see that we are the partners that you're looking for. It's one of the qualities that you would be able to obtain with us. So if you had somebody who had the ability to structure, fix, enhance, and execute loans submissions successfully, how would that be able to help you? Provide training on how you can build a strong book of business. We coach clients and partners on how to increase their credit scores within 30 to 60 days on average. We've mapped out over hundreds of different banks, from major banks and all the underwriting guidelines, to be able to provide faster and better results for clients. We have pre-established relationships with our high-profile bankers. We took the back-end burden away from you by providing a turnkey system. So isn't it better to be part of a well-organized and established organization, which allows you to be able to free up your time? I think in the very end, it's really makes a difference when you have somebody who has been through the experience of working through thousands of different files on how to fix, structure, and credit management when we put all those tools together, it's a very powerful element. And we're able to take somebody from zero to hero. It makes a big difference by helping other people, making more money. And so it's, in the very end, it's something that we can all, definitely try and, make some good progress together. So for the next steps here, what we said is that in order to be able to provide uh, the partnership program with us, if you've already signed up for this webinar, we have your information. We can send our agreement. Once you sign up, they allow us to be able to analyze your deals, to be able to put them in each one of those buckets for overturning and submitting any new additional elements. We're going to be also be creating additional webinars for training on how to be able to optimize, from processing, from underwriting, from sales, from marketing, so all these different ongoing webinars that we'll be hosting in the future. If you're new to this webinar and you were invited by somebody else, if you want to put your name, email, and phone number in the chat, we'll be able to send you that package thereafter. If you look at our website, Deliver Capital, if you want to sign up directly or refer somebody, delivercapital.com/partners, and the email and contact. And here we're going to go ahead and open up the queue for questions and answers. Let's see here. So one question we have here is, do you work with salespeople who haven't been involved in the industry? The answer to your question is yes. We do have certain training programs. Once you understand, I think that the element here for training is that once you understand your product, doesn't matter what industry that you're in, but if you understand the basis of your product and what you're able to provide and how you're able to help people, then does not make a difference between being able to influence them or help them with what they're trying to achieve. We're solving a big issue in the market. I think a lot of people in the loan industry space are really geared towards merchant cash, even for the A-paper borrowers. I haven't found a lot of people who have taken the time to really map out and work with all the major, big banks out there, and a lot of online lending partners, or like the lending clubs and Fundbox and all these other different types of alternative or B-paper lenders out there. But again, they're either a little bit higher interest rates, and it's not as sustainable as working with the Bank of Americas, the Wells Fargos of the world. So yes, to answer your question, we are able to provide you those tools and resources. And I would say, if you go to any type of business owner and say, how would you like to get a loan for $50,000 to $100,000 at a 6, 7, 8% interest rate with a 5-year term, sustainable debt? Who's going to say no, right? If a line of credit, you only pay for what you use. So there's a lot of different ways of obtaining that. We have clients nationally. Can you help them in every state? So one thing that we have done, to answer your question, is yes, we are nationwide. A lot of the big banks will only lend in their footprint. So we have a whole matrix that we've created depending on the location of the client. So if you're in the Southeast region, you have a number of set banks that are very strong for execution. If you're in the New York Northeast region or the West Coast region, there's certain banks that are nationwide and certain banks that are specific to certain regions, wherever they lend. And we've mapped out all of that. We have a whole graph that can execute accordingly. So I've spoken to various companies offering MCAs, but never pursued it because I couldn't offer those programs in good conscience. Very, very true. And I think, if you compare the two, average factor rate is what, 1.25, 1.3, of which the client is paying about 25 to 30% return on that money. And it's such a short 6 to 12 month terms. It's just not in that best interest. Major banks have made it, it's a little bit more difficult to get qualified, but we've also found a lot of lenders that can provide the same results, or there's a little compliance work we're due to get them into that element. We've found such a great referral system in our existing clients just because we do a good service and we're able to get them additional money. The way we structure it, we're able to get them probably 1 or 2, 3 times more than they expected. It's been working out very well. We have taken that time to to achieve that particular need in the industry. How do you find your clients that qualify? One thing that I found that has been very successful for me is by working with certain industries that you don't compete against. Okay, so if somebody is in the like business brokers, for an example, is one example. A business broker is not in the lending industry; they're in the business of helping their clients either buy new additional businesses. Well, typically that particular client is going to need to maybe raise a few $100,000 to buy the additional business that they want to go into. Well, that is a perfect lead partner that it complements what we do, and that how will complement you, right? So those type of partners is what I look for. And maybe what I'll do later on is I'll send some great comparable examples of business brokers, people that we have worked with in the past that can send us continuous amounts of business, and it's a win-win for both sides. What are some type of businesses that are red flag? Yeah, so restaurants, for an example, a lot of banks do not like them. Some, what I found is that a lot of banks have different criteria. Some banks are okay with restaurants. Some banks won't even touch them. Construction is another one that is subjective per bank. And so what we do when you have your Quick Form app, and we look at the type of industry, how long they've been in business, what the personal credit score is, what the business credit report is, and we compile all that together. We have a proprietary system in-house where our team of processors and underwriters and analysts, we know which bank they like, which banks like that accept these certain type of industries, and which banks don't. So we always look for the solution. Hence why we're very big on research and development. Sometimes we have an actually lender researcher team that will take somebody's scenario, and sometimes if it doesn't fit with our current matrix, they'll go out and they'll find the solution for us. Right? There's over 5,000 lenders out there. There is a home for every type of loan scenario. Do you have marketing flyers for equipment purchase? Yes, we do have some marketing assets that are actually our marketing team is compiling together. We said to ourselves, well, if we can empower you guys with as many marketing assets as possible, with scripts, anything that we can do to empower you to be able to filter the right target audience and be able to provide those type of leads. Remember, it's a team effort. So if we can empower you, you bring the qualified prospects, you're able to properly disclose what the program is and how much work is involved, or do some compliance work, or at least spot those particular elements up front, then it just makes the whole process a lot smoother from start to finish. So yes, we will be, if you are a partner, we will be sending out some additional marketing assets to help you guys. I'm interested in learn how to build, how these businesses build business credit in a short period of time. Doesn't it take 6 to 12 months? Correct. I mean, so there's certain elements that where you can build business credit through different strategies that we've developed. I think for the sake of this time, it might be something we can talk offline, or in another webinar for how we're able to execute. There's a lot of different strategies that we've developed that we get into maybe in a different slide. Do you have lenders that will work business in the cannabis industry? I will say we have recently found, I was recently at a conference, and there was a selective few that were accepting the cannabis side, but I have personally not currently dealt with it, so I haven't really investigated and gone through the list of banks that will accept. But if you do have a client, we'll be more than happy to review the whole package, and we'll see if there's a home. Well, what I will say, guys, is that we don't like to waste time, right? As I said before, time is money. So the faster I'm able to analyze a profile, and the faster I'm able to respond with, what is a solution to this particular person's package, the faster we're able to get these packages into compliance and submitted, where we all make money, right? As a performance-based company, we like to execute and execute fast. So just my recommendation, just send over the scenario. We have a quick form app that goes through really the highlights of what I look for. Once you send that in, I can tell you immediately what needs to happen, or if it requires some additional research to figure it out. What's the highest loan amount you funded? What's the average loan amount loans funded? So the rule of thumb for loans is taking about 10% of your gross revenue. So if I've made $1 million for the year, if I have a client who made $1 million, typically the bank will give you about $100,000 for the loan amount. We have some banks that can increase it up to 15 to 20%, all depends. What I look for is something called a debt service coverage ratio, which means that if that client can afford that particular loan, usually it's ranging from a 1.25 to about a 1.5 factor. It's very similar to mortgage, where your debt to income ratio is what we look for on the commercial lending side. There are hundreds of loan companies. How do you separate your company from others? Well, I have to say that we separate ourselves by the research that we have compiled from our major banks. We have mapped out all the underwriting guidelines, and combining the credit compliance management side along with the research we've done with the major banks is very powerful. Okay, so if there's somebody with a collection, we utilize our lawyers and our compliance team to be able to get that person from that 620 all the way to a 720 by adding either additional trade lines or removing discrepancies that are not supposed to be there. I think that by itself is a very unique proposition, and we found our team that can get accomplished through compliance on the credit side in a very fast period of time. So that's one very unique selling proposition that I can say. And of course, all the the streamlined programs and additional products that we're able to provide. I think one thing that attracted a lot of people when we put the ad up on net was these other programs that are not really accessible through a strategic advisement company that has mapped that out. So I'll give you an example. Some of my internal staff here, one aspect of it, we hired an underwriter that used to work for Bank of America. So we're acting and we're working just like a bank as the process for underwriting and processing each one of these packages. So if I can spot the strengths and the weaknesses up front and be able to correct it, and have a professional that can tell me exactly what the weaknesses are, then maybe there's a way that we have to restructure that. And so I think a lot of people don't take the time to be able to build those strategies up front. And I think we take that particular essential. We know we're not in this for the short run, right? The medium to long term goal is what we're out here, because that client has been proven time and time to refer their friends and family, because we do take that time. We're very customer service oriented. We have a lot of great strategies that we implement for each one of these clients. And I think that's what differentiates us from anybody else. All right. Let's see here. Any other questions? Answer this. Answer this. So a little bit about myself. From before that, I've been in the finance industry since the last 15 years. Uh, Built a mortgage company, was an underwriter. I've been, numbers always really made sense to me. So I think being my experience from the mortgage side, going all the way to the credit management, we've had a credit repair company, credit coaching and optimization. And now, since the last 10 years, we've been very heavy in the personal and business financing space. So we've been around for quite about cumulatively within everything. We've have about 20 years experience with collectively within the industry. You recommend hiring a cold caller? I think marketing is definitely an art. If you being myself in a telemarketing industry since I was 14, I think of how you approach the particular client and what pain are you trying to resolve for them. I can cold call a phone book and ask clients if you were able to get a qualified loan from $50,000 to $250,000, anywhere from a 6, 7, 8% interest rate with a 5-year term. Is that something that would help your business? I think just asking that particular question, you'll get an unlimited amount of leads. But it's always great to start with friends and family, first, and then you can branch out. There's a lot of different lead companies out there. I think establishing relationships with strategic partners, like the business broker example I gave you, is probably one of the best lead generation elements there. So we'll compile some examples of different strategies for leads and how to be able to build that referral system, possibly in another webinar, or I'll do a write-up and we'll send it out to everybody. All righty, guys. I think we have a great amount of time. I wanted to thank you guys for attending the webinar. If you do have additional questions, by all means, please send us an email. I'll be more than happy to either have conversations with each one of you, answer any questions. Again, we can be here for hours, but we just wanted to close here is that we take a lot of pride in working with our clients. Sometimes if it does take a little bit more time to get them into compliance or to help them structure their loan properly, knowledge is definitely power. And if we can help that person, it's just going to go so far with when just helping everybody out in a long-term aspect of it. So again, thank you so much, and I hope to hear from you guys soon. Be aware for additional webinars. We're going to do a lot of training. And we'll be happy to accept any scenarios or look through those programs, and we'll get that move over. Thank you guys, and have a wonderful day.